To move the microphone back so it's not like I'm eating the microphone this morning. A lot of good information this morning. We have the Fed coming out with their rate hike today at 2 p.m. So we're going to talk about FOMC. We're going to talk about Apple earnings. AMD had earnings. Why, if AMD beat top line, bottom line, are they going down? I'm going to explain that. I'm also going to explain JP Morgan's prediction or game plan on today, Fed Day, 25 basis points increase happening at 2 p.m. What are we going to be listening to? Hawkish or dovish comments. And then what else can we talk about? Oh, debt ceiling. There's no news to report on the debt ceiling. Remember, the U.S. has never defaulted on their payments. We've had delays in the past, but understand Social Security, Medicare is fine. But if you're getting paid and you're in a government job, postal, you work for the Army, National Guard, you're a senator. We don't care if the senators don't get paid. I'm sure that's true. And then what else do we have going on today? Let me just see. Where's my... Let's just go down here. Oh, and we'll talk about the SPY ranges. We always talk about the SPY ranges. So FOMC, debt ceiling, Apple, and SPY ranges today. We'll talk about AMD. Job payroll numbers came out. Non-farm payroll rises by close to 300,000. The estimate was 145 to 148,000. Went up by 296. So again, that tells me the Fed should still be somewhat concerned, should still sound somewhat hawkish. We'll talk about what's going on with the Fed in a second. I just want to see if I have anything. So AMD, right? People are like, yo, AMD beat top line, bottom line. Yeah, their forecasting sucks. So what you do is you take their, trailing 12-month PE, right? Price over earnings, which is how we calculate the valuation of stocks. It's 463. Yes, NVIDIA is quite high as well. But understand, I still expect the chip sector to pull back. Seems overvalued. I can see AMD in like the $72 to $74 range. I'd like NVIDIA to pull right back to the $215 range, $220 range. It just makes sense to me. Dozens of regional banks got hit hard yesterday. PacWest minus 36%, Western Alliance 31%, Zion Bancorp 15%, KeyBank 9%, Citizens Financial 12%. There's a chance some of these get some type of bounce today. Me, I'm staying away from the banking sector. Okay, right before close yesterday, I posted this on Discord. Over 2.7 million in the money calls for tomorrow's expiration came over the tape. Generally, when we see large trades coming over the tape, they usually go out a month, 2 months, 3 months. It's not like an instantaneous gratification. So what am I expecting this morning? I was expecting exactly what we're seeing overnight, a pump. But then I analyze the market and I say, look at the volume from yesterday, over 100 million on the SPY. Where did we end up? Down 1%. I'm expecting a dump. So I'm expecting a pump for those people to secure profit, get out of positions, and then I'm expecting a dump going to Fed. Now, I could be incorrect. Let's remember, Fed days like today, extremely volatile. You'll see like the market pushing higher. You're like, oh my God, they're just running in. They're pumping it into the Fed. And then all of a sudden it'll drop out of the sky. Or you'll see the vice versa. You'll see a pump in the morning, then a dump, or a dump, then a pump. Exactly. Be wary of everything. So are they betting on a dovish Powell? That was the tweet. Are they betting on a dovish Powell? No, they're going to be out of these positions that expire today. Before Fed Powell speaks, they're going to take their morning pump and get out of this position. That's what you do. Sorry, all right. I posted this picture a couple days ago. Again, what are you seeing? Yeah, I mean, you have to look at in a broader perspective here, but this is basically your market. So where are we? Well, you can look at the last red arrow. It looks like we're heading down. So again, you could have some up days, but yesterday, was a pretty massive, strong down day, heavy volume, multiple industries. So it tells me as a whole, I am still okay with being a bear. Even if we push higher today, let's say we go back to 322 on the Qs and the SPY goes back to 414 or something like that. And I'm going to talk about my predictions soon. But again, I would still be holding puts. I would be waiting SPY 413, 414 before the Fed speaks. I already am a bear. I'll hold my positions throughout and play out until Thursday and Friday, and we'll see where Apple's earnings come. Because again, here's what could happen. Let's say everything plays out today and we're going to Apple earnings. And Apple reports something like AMD. They beat top line. They beat bottom line, but their forecasting is weaker than expected as far as their laptop sales, their iPhone sales, their watch sales, whatever they're selling. So say they beat top line, bottom line, but their forecasting sucks. Apple will drop. Apple would drop probably 4 to 6%. Now, if Apple drops 4 to 6%, so are Microsoft, Amazon, Google, Netflix, Tesla, everything's going to drop and follow Apple. Yeah, it's crazy how Apple leads the market. Same thing. If Apple beats earnings and crushes earnings, people are surprised to the upside. Don't be surprised if the market just shoots up on Friday. So there can definitely be a ton of lotto plays, which I will likely not be talking about tomorrow morning because I won't be on live tomorrow morning. So Discord only tomorrow morning. I will be back on Friday. If you like, join me. Please, again, join me. You're joining me today. Give me a thumbs up if you like what I'm saying. And then you'll see me on Friday. Let me just get to a couple other comments. SPY yesterday, 414.82 on the high side. So almost 415. 407.82 on the low side. So what am I thinking? Well, first off, we closed kind of right in the middle. What do? I take out my cheat sheet. Remember the sheet that I actually draw on white paper? I used to use a big board behind me. But what does that tell me? So here's your chart right here, okay? So what is that? Last Monday started here, down, up for a few days, right? Press that 416, 417 level, looking for rejection. So if I was going to say I'd go back 2 days, I'm saying, where am I looking for rejection today? If we tend to go up, I'd be looking at the high of yesterday, 414.82, or right under 415. Let's see where we are pre-market. We're probably right around 412 because that's where we were sitting before. Let's just see if I get the pre-market up. Yeah, 411.69. Again, no surprise. Let's say you're worried about the Fed, okay? Let's say you're a big institution. We'll play a game right now. You're a big institution. You're a hedge fund. You're Wall Street. You're worried about the Fed. That's why we saw the selling yesterday, okay? So then what are you going to do? You still have positions that you want to get out of, take profit, secure profit. What are you going to try and do? Well, you're going to let the market pump pre-market. You're not going to sell pre-market. So you're actually, when the market opens, you're going to let it pump some more because, again, you're looking to sell your positions. So you want the market to go up and you want to sell into the spike. So just because these institutions want to get out of certain positions before the Fed, that's why I think at some point during the day, especially if the market pumps on lighter volume, I would expect a massive drop-off going into the Fed. I don't know if it happens at 11, 1, 12, right before 2, maybe 10:30, maybe 10:20. I don't really know. But again, wide range yesterday telling me lots of volatility, 103 million, 104 million on the SPY. So what am I expecting today? Well, nothing changed from yesterday to today. In fact, we had AMD earnings, Uber earnings, Starbucks earnings. I'll talk about that shortly. But again, I don't see why the market should be pumping this morning. Psychology tells me market pumping only so that they could dump it. I'm going to be very cautious. Again, any put positions I am in, I'm going to hold through whatever pump it is. Wait for the Fed to speak. I expect some hawkish comments, and we'll talk about what comments to expect. So let's do that, and then we'll get into stocks. We'll make it a good, quick morning. If you have any question, please put it on the sideline. So real quick, here's what you're listening to when the Fed speaks today. The Fed is going to announce 25 basis point increase. We all know that it's baked into the market. It's like an 86% or probably 87% now chance it happens. 13% chance there is no rate hike. No rate hike, the market skyrockets. Okay. Hey, we're not raising rates, skyrocket market. In reality, what should have they done? They should have raised rates higher a couple months ago. But let's talk about it. Okay. So 25 basis points. So everybody already knows that. So here's what you're looking for. The Fed will talk. If they say anything that says no future rate hikes, that will be a pivot. Market will go up. If they say something like we're thinking, something to revolve around rate cuts, okay? Because the market already has 2 or 3 rate cuts priced into it by the end of the year. Now we're talking about rate hikes, okay? So the market has rate cuts priced in. So for the Fed to be dovish, for the market to go up, first, no rate hike today. Okay, done. Market goes up. 25 basis points, the market, that's what it's expecting. If the Fed says no more rate hikes, or we're putting rate hikes on hold, or we're going to pause and see how that plays out for the next month before deciding, then the market will go up. Any type of pause, market will go up. If you hear words like, yes, we're still concerned about inflation. We're still concerned and want to keep inflation down. That's our number one priority. And rate hikes are a possibility in the future, and we'll discuss that next month. That sounds kind of hawkish to me. The market will likely face some downward pressure. If you hear something like the Fed saying, because the market has 2 to 3 rate cuts priced in by the end of the year, if you hear the Fed say something like, we're not sure about future rate hikes, but we can tell you that there are going to be no cuts, or anything to that, anything that sounds similar to that basically leads you to believe no cuts for the rest of the year, which is what I believe. I would find it hard for them to have rate cuts, even though the market has 2 to 3 rate cuts priced in already. So again, that's the kind of wording you're looking for. But if you hear something like that, again, bearish. So you can hear bullish or bearish. Don't just miss what the Fed's saying. Don't not listen to the Fed at 2 o'clock to 2:30. Watch the market's reaction, because what can the market do? The market could spike. You're like, oh man, they must have said something good. I'm going to buy in. You buy in, and the market dumps. And you're like, shit, that always happens to me. I buy, the market dumps. All right. So with that said, let's bring up Discord. Let's talk about a couple stocks. I really want to just bring up, you know what? Screw Discord right now. We'll bring that up in a minute. I want to talk about some stocks and specifically some plays. Yesterday, I was a bear in the market. What did I do? My position turned green, and I decided to sell somewhere in the 10:30 range. Actually, it was closer to 10 a.m. because I shouldn't trade by 10:30. My bearish position, my calls in the SQQQ skyrocketed, okay? And I left 75% on the table. I took 27% on my accounts. The two accounts I was trading yesterday both went up on an average 27%. If I had just held and done nothing, and you've heard me say this multiple times in the last few weeks, if I had done nothing yesterday, okay, my accounts would have went up close to 100%. Meaning I was in good positions. I mean, I would have sold around 1 o'clock, 2 o'clock when the market was reversing, something to that extent. But again, for me, one of my kryptonites, all right, my kryptonite is I like to trade too early. I get anxious. Oh, I want to secure the best profit. But when I'm correct, I never get that full max value. And yesterday I went ahead to trade. So yesterday I was in SQQQ calls. And then what did I do? When I sold them and I saw the market reversing and I actually called the bottom this, I got into some TQQQ calls. The complete flip side. I said the market's going to recover. Those calls were $85 each. They closed yesterday, I think, $1.09 each. So again, you're taking 15, 24, 24.89. You're about, 29%. With that said, I decided, because I was watching CNBC and I'm listening to the analysts and I'm agreeing with the analysts that the market should really have a tough time going forward and that we probably are in recession. I was like, shit, I better sell my TQQ calls and flip it again. So be extra cautious. It's harder to trade when you're flip-flopping. Okay, I'm going to be a bull, then a bear, then a bull. That's tough. Now, if you want to be a bull and every dip you're going to buy it, then that's a good strategy. Every dip you're buying, you're selling when it spikes. Every dip spikes. You want to be a bear. Every spike you're buying puts. When it dips, you're selling. You're not holding and riding the elevator up and down. So bear scenario, spike, buy puts, dip, sell. Buy spike, buy puts, dip, sell. Reverse, right? You're a bull. Dips extra hard like we saw yesterday, 407.50, 408 on the SPY. Buy calls, 410, sell, 411, sell. So as long as you have either strategy, you're fine. What's wrong or what's worse is me yesterday, I had both strategies. I'm like, I know what's going to happen. I'll write it down. Then I'll write it up, and then I'll write it down again. And I guess that last down never came. So again, I traded 3 times yesterday. If I had done nothing at all, first position would have been most successful. Next, second position, I held it longer. Again, I took 10%. I left about 30% on the table. Same with my other trade yesterday. I took 27%. I left 75% on the table. So please, when you're in good trades, let them run a little longer. Have a trailing stop loss. Again, I was out and about, and I was like, you know what? Let me just. And as soon as I sell something, I always have seller's remorse because I zoom out. I'm like, I had a great position. I don't know what I'm doing selling that. I'll show you guys what I do with Discord and what I look at pre-market very shortly. But again, I just wanted to pull up my watch list today, talk about a few different positions in stocks. Okay, let's talk about the SPY. Okay, so this is what just happened to the SPY. Again, pre-market, I don't really give a shit. What I can tell you is yesterday's range in the SPY, let's just pull it up real quick. Stop sharing. Pull up the SPY so we can talk about the market. And you guys can actually look with me. How exciting. Okay, let's see. StreamYard, let's add it. Come on. There we go. Okay, so let me just get over to that thing. Get out of this ad. Okay, so yesterday, here we go. Let's go to the 3-minute yesterday, and we can see what happened. Little sell-off. Shit, I need the 5-minute, don't I? Okay, here we go. So here's what I'm noticing, and here's what you all should be looking at with me. Let's look at the size of the volume as the sell-off was happening yesterday morning, okay? Here's the volume, different volumes. Okay, so let's go up to this one. Here, go back to the average. Now, if you look at the average while we were going down, it's much greater than when we were going up. So we were going up and fading higher on light volume. But if you see any heavier volume right here, and to close out the day, we're seeing negative demand. So the fact that the market's pushing a little higher pre-market, I would definitely expect us to fade back to this range today 408.41. So we could press the 412 number, which we were doing pre-market. And I'll give you my prediction. My bear case scenario is, okay, market opens. Yeah, we'll press that 412 number. If we press that 412 number, then I think we're going down 4.5 to 5 points from there, and that will be the low. So if we go 412.25 on the high side, we can go 407.25 on the low side. If we hit 407.25 on the low side, it's a lower low, which makes sense for this market. So again, there is your bear case scenario. Bear case scenarios, we're going to reject 412.25, and we saw that happen 2 or 3 times pre-market. Now, again, I don't pay that much attention, and we'll talk about the dark pool. But your bear case scenario is, yep, 412, reject, try it again, 412, reject, drop down 410, drop down 408, 407.50, something like that. That's your bear case. Bull case scenario. Okay, let's get a bull case scenario up. Let's look at it. Bull case scenario is, let's look at what we saw yesterday, break out my secret cheat sheet chart. Okay, and let me just go down yesterday, see where we saw some support. Okay, so we got some support there, 407, 411. Yeah, okay, 411. 411. Your bull case scenario will probably drop down. Where the heck is yesterday's low? Yesterday's low is about 408, a little under 408. So your bull case scenarios, we're going to drop down sometime after market open. We're going to drop to 408 and change, 408.50, something like that, 409 possibly. Again, you're talking about a bull case scenario, so we're going to see a drop, and then you're going to see a spike back up to 414. So again, I'm looking for about a 5-point trading range. If I find the top, and I say the top is $412.40 on the SPY, and I say, okay, we'll trade a $4 range, then I can go down and say, okay, we're definitely going to hit 409 something. If we trade a 5-point range, we're going to hit 407 and change, 408 and change. Same. If I see the bottom is in and we're finding support right at a 408.75 level, 409 level, let's just make it 409 flat. And I say we're going to go up 5 points from there because that's the bottom. We're going to go up to the top side, 409 on the bottom, 414 on the top. Now, understand, again, if there's a lighter volume day, you could see tons of volatility. I see somebody asking about coin puts. We'll talk about some stocks in a second. Let's just see. Okay, market's coming down. Again, I'm in some bearish position, so I was a little flustered when I'm looking at pre-market and everything's ripping 0.5% higher. And I'm like, okay, Matt, you already said this to yourself. You're expecting the market to rip on open and then dip and fade the rest of the day. Look at the volume yesterday. And again, I might be a day early. We could have a bit of a rebound today based on how much the market was sold off yesterday. So, and I used to mention that. I mentioned when the markets used to go down 900 points, we used to bounce back 600. When the market used to go up 1,000 points, the next day we would sell off like 600. It sucks, and it's like total manipulation because you would be like, hey, if they push the market up 1,000 points, why would they sell it the next day? Or vice versa. If they sold off the market 500 points yesterday, why the hell would they buy it back 300 points today? It just doesn't make sense to me. All right, so some stocks that came out with news. Ford beat. Well, why is Ford off 2% pre-market? Because cars and car manufacturers are just in trouble. Prices are going up. Supply of their components are like their special materials, especially with the EVs, more expensive. And I recently saw a story of how much these automakers make per car that they sell, that sell on the lot. The actual return to Ford and GM and Tesla had the best return. I think it was like $140 per car. Everybody else was like under $100 a car. I think GM was like $65 a car. It was pretty crazy. Ford, pretty strong selling yesterday. Again, they came out with decent numbers and it's down. I wouldn't even touch Ford. Starbucks, which was ripping higher for a number of days, right? Here's your 5-day. Here's your 1 month chart of Starbucks, okay? 1 month chart, where was it? It was like $100, maybe close to 102, ripped all the way to $16. Finally sold off a little yesterday, had earnings. What are they going to do? Sell into the earnings. It's going to consolidate and come back down. Again, not going to touch Starbucks. AMD, yes. So AMD, I get a little more excited because AMD's forward trailing PE is 463. So we all hear, and people say, what the hell does that mean? We all hear companies PEs, right? What's a good PE? What's a bad PE? Well, Meta, when everybody was buying Meta's PE went from 27 down to 13. So Meta's PE was 13. We know Meta's a strong company. Meta has earnings. They have marketing dollars, et cetera, multiple platforms. their PE was 13. When you look at S&P companies in the S&P, their average PE is generally around 17. If you take all of their PEs, here's your PE, your PE, your PE, blah, blah, S&P, all S&P companies, you take a weighted average, you're looking about 23. Now, in recession or in a bad bear market, it can go down to 15. All right. So you can lose 8%. Everybody's average PE is about 15. That's when you know they start buying. With that said, AMD's forward on their last 12 months trailing PE is 483, which makes the stock extremely expensive. So again, is AMD going to bounce? Hey man, they're selling off, but I know that this is going to bounce higher on open. They're going to buy it. Yeah. I mean, some people might say, oh, AMD's on sale, I'm buying it. And they might see a bit of a recovery, but I would wager that a few days from now, AMD will be lower. Let's talk about, remember I said Best Buy, don't get messed up with that. It was 34 cents. Now it was 7 cents. At last I saw, I told you guys not to get messed up in SVB, right? And that went belly up. There's some things don't get involved with. Let's just see. Intel's making a little move off the fact that AMD was so bad. Now, does that tell me I want to buy Intel? No. Intel has outflow, meaning they're selling at the bid. So even if Intel goes up, they're probably going to be selling the spikes there. What else am I looking at? Yeah, I'm looking at Apple. I mean, Apple's just been ridiculous. They finally sold off Apple a couple of times. You saw it went down to 164. Now it's back up at 170 again, or 169 pre-market. Where can I see Apple going after earnings? Ooh, great question. Let's say Apple misses earnings, or the institutions do not like Apple's earnings. I could definitely see something like a 7.5% dip. So then I would say, okay, well, Apple's at 170, let's say 7.5% from 170. So 7%, 7.5 points. And then you got about 5.7. So you're 7.5, 5.7. You're about 13 points. So I would say, okay, 13 points, 170. I could see it going back to about 157 if earnings miss, okay? So that's the only way I would get involved with Apple if it makes sense to me. Okay, let's get to some questions here, okay? Questions and comments. Okay, good morning. Hey, my amigo. Okay. Good morning, Matt. Beautiful initiation yesterday on the bearish stance, bank yesterday on the sell-off, and afternoon buyback. Yeah, so I mean, damn, I called the market pretty accurately yesterday. However, what I did was dangerous, and that's what I want to talk about. What I did was dangerous. You could take, again, a bullish position means you're buying every dip. You're good because you know your strategy. A bearish position, you're buying puts on every spike. What did I do yesterday? I had bearish position going today. The market dropped. I flipped it. The market flipped and started to recover. And then towards the end of the day, I flipped it again and decided I wanted to go back to bear because I was looking at the biggest picture. Oh, intuition. Gotcha. Yeah, man. Intuition. Sorry. Yeah. Good morning. Hey. Hey, can we review Ford today? Check out the monthly chart. It's about to pop. Just unsure about the technical analysis. No, Ford is not about to pop. I mean, if you believe it is, Matthew, what I'm warning you about when it comes to Ford is the fact that all automakers are struggling now. The same way you see, if you want to flip on Ford and take Ford, or even GM, which I was a fan of, and I saw a little bit of a bounce, and then I saw all the institutions loading up against me, I would be cautious. You want to see support in some of the other ones. You want to see support in Tesla. You want to look at some of the Chinese ones, Lee and Neo. You want to see support there. You want to see support on GM. Then you can get into Ford. Because if you're wrong on Ford, I mentioned this previously, Ford, unlike some other automakers, can move, and it can move quickly, either pre-market or after hours, like 5-6% on slightest news. And then all of a sudden, you're down 60 cents. Your options never come back, whether they're puts and calls. Let's remember, all options were created to expire at a zero value. All options are hedges. Options are not created like, hey, I'm buying the stock, I'm buying an option. The stock is the underlying position for the option. Options were created by Wall Street as derivatives, as hedge bets, as a way to sell or covered call, covered puts. Naked calls and puts weren't really, as strong or prevalent as they are now, especially 0 days to expiration. They just keep adding them. VIX added 0 days to expiration calls and puts now. So that's pretty insane. So that was Ford, right? Hey, good morning. Thoughts on SYF. Let's check it out. SYF. I mean, you're asking me about synchrony Synchrony Financial, never heard of it. Its volume this morning is 7 shares. Its market cap is $11 billion. Light volume, company I don't know. I would stay the hell away. Again, if you're looking at the chart, they've been selling off. So really, you would have been selling off right after earnings. I guess they did an ex-dividend yesterday. Ex-dividend got a drop. I'd stay away from companies after the ex-dividend because I've seen them pop. We could look at Zim. Zim went down to 16, then back up to 21 the next day. Let's we got Matt. You were spot on with SPY puts yesterday. Unfortunately, I didn't have any trading days left. Okay, Mr. J Rock. Here's the suggestion. Let's say you were in SPY puts yesterday and you actually were killing it, and then you saw the market start to recover. Anybody that doesn't have day trades left, you see the market start to recover yesterday, and you're, in some SPY puts. Let's say it was 408 or 407.90 or even 408 or 408.20, and you saw the market start to recover, and we finished, and we're back at 412 this morning or 411. You start to recover at 408. You don't have any day trades left. Guess what? Sell your puts. Take the PDT penalty, okay? Bank that profit, okay? If you're using Robinhood, Webull, I don't even care, TD, you can ask for the money. That'll settle the next day. Ask for it into your account. It takes 2 days. So 1 day to settle, 1 day for ACH transfer. 2 days later, you can use an ACH the next day. So now you're 3 days out, and you fully funded a new account, whether it's Webull, moomoo. I mean, we provide links like that probably underneath the video. After we're finished, we'll have a moomoo link. But yeah. Let's see. Thank you for explaining all the potential scenarios. Yeah, so the reason I explain the scenarios is because somebody on Webull mentioned this morning that they thought if the Fed mentions a pause, that would be bad for the market. If the Fed mentioned a pause, that meant the Fed was acknowledging how bad shit is. And if shit's that bad and they're mentioning a pause, then the market should go down more. No, a pause would be good for the market. So make sure you understand when you hear different terminology, whether it's the Fed today or whether you hear people talking about interest rates or yield curves or inversions or gold or the US dollar or anything like that, understand the meaning behind it. Thoughts on the US dollar. Okay, I mean, I haven't spoken about the US dollar in a while because the market doesn't really care about it. The US dollar used to go up, the market would go down. The US dollar used to go down, the market would go up. But then we had some days where the US dollar would go up, the market would go up. The US dollar would go down, the market would go down. So I stopped using that analysis. But if I look at the US dollar longer like this, I'm like, okay, we're in between a zone. We're right in between this high point right here and this low point right here. I'm assuming this high point is probably 105 and this low point is probably 101. Yeah, 102 and 102 and 101. Sorry, not 105. I can see a reverse here. So 102 and 101, we're kind of stagnant there. And that's the 1 month. I'm looking at the 3 month again. So there's not really any great movement in the dollar. Remember, we were up to 105. We were up to 113. So again, as we trade a small range, the US dollar is going to have less effect on the market as long as we stay between the 101, 102. If you see the dollar pumping during the day, I always have it on the side chart. If I see it pumping, that'll put downward pressure on the market. So if we go from 102.62 to 102.60 sometime during the day because of some news and the dollar goes up a dollar, 1 point, the market will go down. Vice versa. If the dollar goes down, you're seeing it at 150 cents, something like that. That would be very good for the market because it's cheaper for people to invest in the market. All right, coin puts. Let's take a look at coin. First off, before I get involved with coin puts or coin calls, I'm going to look to see what the market's doing. I'm going back. I see that they're buying coin for 2 days, so maybe it bottomed. I don't know enough about coin, or I know enough about crypto, but I really haven't followed crypto. So I saw crypto pumped all the way to 30,000, and from 30,000 it went to 27,000. Then from 27,000, we actually went to 29.5 the other day before the market sold off. So I don't even know where crypto is right now. So for me, not knowing where crypto is, where Bitcoin and Ethereum are right now, I'm staying away from that. So 28.3. So look at the craziness. Okay. Now, if you told me we're going to pump up to 30,000 again, I would say, yeah, hell, coin calls. However, if you're telling me we're going back to 26.9 or 27.2, then coin puts make sense. Again, I don't like coin as a company. They lose $1 billion a quarter. However, there are some institutions that are heavily behind coin, including Kathy at ARK. So, I mean, she could just keep buying. They have so much money that if coin starts going down, she could buy coin. So yeah, I stay away from certain stocks like that. What's up, Fredo? What do I think about Starbucks? Again, I would have to read. I would have to I would have to really read the earnings report to give you my feedback on Starbucks. I know that they increased their prices, which increased their revenue, which increased their bottom line. Oh, yes. My prediction, which I made yesterday, and when I zoom out, I still believe it. I still look at the market, and I look at what I told myself on the SPY, and I say to myself, okay, SPY rejected, went down over 1% yesterday. It was down 1.5%. So maybe it's owed a little. We bounced off the bottom, which we always do no matter, because nothing goes straight down or straight up. So I started thinking to myself, well, if we lose 1%, again, simple mathematics. We went from 414 to 407 and change, right? Let's call it 408. So 415 to 408, 7-point range, bounced off the bottom as we do. 1.5 point, 410. People have to say 410.84 we close, follow momentum. We should open up at 412 this morning. No, I zoom out. I look at the big picture and I say, okay, even if we open at 410.84 and the momentum carries all the way to 412, 412.50, and we reject that, then we're going back down. If we trade 6 points from 412.50, we'd be 406.50. Plus, who's to say we actually get to 412.50? Again, if we break through, I'll look at the dark pools with you guys. Let me just show you guys the dark pool levels and we can speak about that. But yes, my prediction is at some point during the day, and I'm not saying we hit 406 flat. I'm saying we see a number with the SPY that says 406 point, I don't know, 97, 0.67, 0.14. I don't really give a shit. As if I see 406, then I'm going to shout it from the rooftops, 406 flat. Again, make predictions. That's how I trade. I watch the market. I watch the volume, and then I make predictions off of that. All right, so let's just bring up the dark pool on SPY. Again, this is our Discord, soc-platform.com. You can join. We have all of the data information from Trading Ticks. So people pay $100 for this service. Again, ours is like $35 a month. You get that $100 service, plus you get much, much more lessons, flows, algos, all this good shit, updates during the day. Okay, so yesterday when the market was dropping, I thought we were going to see a bounce at 412.78, which is why I sold some of my puts. We broke right through this huge dark pool level, 412.78, right through this 411.40 dark pool level, right through 410, right through 408.64, and we ended right in the middle here before we bounced. Understand, this is a ghost zone. These are very light levels. So when I say I think we're going back down, yes. What else? Because we're seeing 32.61 above where we currently are. We're at 410.84, up a point pre-market to 411, but we're still under the 412.78, which could be a rejection. This 411.40 could be a rejection. If we go high enough, 414.15 could be a rejection, or 415 could be a rejection. Again, even if we go up to the top today, 415, let's say here, 414.15, I probably not. Let's just call it 413 here. 413, 4-point trading range. We're going down, we're touching 409. So as we sit pre-market, we closed at 410.88. We're at 411.24 right now. I still think we'll see 409 at some point during the day. Again, my prediction, which is my bear case scenario, I still think we see 406 today. It might have to wait till the Fed, and the Fed might have to sound extremely hawkish for us to drop that 1%. But again, yesterday, the day before, personally, I don't think the Fed should raise interest rates. However, in my analysis of the Fed, I actually listen to what they say, and the market is absolutely insane. The Fed has always been hawkish, and I always say that, and I always say the numbers are going to be hot for inflation. The Fed needs to be hawkish. They need to raise rates faster, quicker, stronger. Yes, they're going to hurt the banks, but the banks are freaking greedy anyway, and it should be survival of the fittest. Anyway, that's it. I got to head over to Discord. Oh, shit. My girls are going to the doctor yet again today, yesterday afternoon, this morning. So again, on Discord intermediately, but I will drop updated videos. Got the 9 a.m. video, the 11 a.m. video. Romeo's not live trading today because we have FOMC at 2 o'clock. I will definitely be on right after we have the minutes drop because, again, expect tons of volatility. You see a spike down, don't get fooled. We're likely to see spike, 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 spike. See you all later. Heading over to Discord now. Talk to you guys soon.